Elixir Equities. Dipan, what do you make of the entire Keynes saga? Opportunity to buy, you reckon?
Yeah, good afternoon. Thank you for having me on your show. I'm watching it very closely. I think it'll come to a sweet spot where you could certainly take the chance because end of the day, it's a growth company in an industry which also the dynamics are internally very good, aggressive management, a lot of expansion plans going on stream. I would say that they may have messed up a little bit on their inorganic strategy, but that certainly is definitely something they could look at. So let's just wait and watch. I think at some point of time it'll come to an attractive level. I've seen how these things play out, not in the same industry, but if you remember, whenever a pharma stock gets completely,
Him on a patchy line. We'll try and reconnect Dipan over there. Kunal, a chart check on Keynes. We've spoke about this stock ever since the issue has started for it. But has your view changed at all given the fall has been so sharp? Now does it make for a good case to buy, or is it looking attractive at all?
See, price-wise at 3,900 odd levels, the last 2 or 3 days, it indicates that there's been some sort of buying which has happened for the stock price, some support which has emerged for the stock after this very sharp selling. But then the only question over here is that this level of 3,900 thereabouts for Kaynes Tech coincides with the correction the stock had seen in the first half of 2025, where the stock had corrected to those kind of levels and then bounced back to 7,000, 7,500 mark. The worry for the stock is that if it breaks below this support level, then I think you're looking at the stock going into a steep underperformance, which could last for maybe many months to come by. So that's the concern for Keynes. In this kind of a scenario, it is always better to try and just about wait out for some more time, to try and observe what the stock is going to do over the next, say, couple of weeks, over the next couple of months, whether you see the stock holding on to those levels, because there's going to be a lot of fight in terms of bulls versus bears into the stock price at current levels. So we need to see which is the most stronger hand going forward, and that's what I think one should probably try and take advantage of.
Very interesting. Do we have Dipan with us? Okay, so we'll wait for Dipan to come back. But while we're at it, blockbuster debut, Meesho listed at a 45% premium after IPO. Subscribed, the IPO was subscribed nearly 80 times and massive QIB demand that it saw. Equest also opened with a strong 13% listing gain. Again, the subscription numbers were just out of whack, 100 times. And Vidya Wires, it listed largely flat, and this is despite a 27 times subscription number. We caught up with all three managements, listening to pieces of that conversation, and we'll go in and also speak to management.
Reaching scale much faster is very important. Today, a lot of consumers who join us, they join us because we have the largest base of these sellers across the board, and vice versa. A lot of sellers join us because we have the largest base of annual transacting users. Which other platform will offer you 23 crore customers to serve? So that's the beauty about platforms. Once you get to critical mass, as they say, you have increasing returns to scale, that you can keep growing much faster, and which is the approach that we have taken. And which is why, if you see, even Dhiresh was mentioning, even now, even at this base, we've been continuously investing. Instead of maximizing profitability, we have been maximizing, hey, can we go out and acquire more users much quickly if we have great returns or payback on that investment amount.
Our order book really is reflective of what my end customer order book is, Airbus or Boeing. Their order book is 10 years. Our contracts are 5 to 7 years, which pretty much matches to those programs. And so we have a very good visibility of our order book, and our growth is also corresponding to the natural growth of these programs which are happening, which are announced already. Just to give an example, Airbus A350, 320 is going from 52 aircraft per month to 75 aircraft per month by 2029, and we are pretty much will have that increase coming to us, that growth rate. And on top of that, we are also winning new contracts.
Next financial year, 60 to 65% utilization will come. Even in this quarter, we will get some impetus from this current unit also. So the revenue will accordingly, our capacity utilization, optimized utilization of our capacity, the revenue will also grow.
We already have 12 products in our portfolio. Another 6 products we are adding in the new facilities. These new facility products targeted are the sunrise industries, including this renewables, EV, AI. So all these industries are actually speaking, basically rising industry. They will give good margins, and we shall be able to improve it in our coming time.
It's seen its fair share of cuts, but off late it has been doing well.
Yeah, that's right. I think clear beneficiary of the rupee depreciation because these metals are traded in US dollars and they're benchmarked to global markets. So I think we are seeing that benefit come through to these metal companies per se. Also, globally, a lot of investors and experts are very positive on metal prices per se. So sentiment also is better for these companies. And most Indian metal companies are expanding capacity, be it in steel, aluminum, copper, wherever they are. They're expanding capacity to take care of rising domestic growth as well. So I would say intuitively, generally positive on metal companies, but one should keep in mind that they are also trading at rich valuations. I've seen a whole host of metal companies trading at much lower P multiple than they are trading just now, and also the profitability also has been pretty decent. So in a way, if you are getting into these companies just now, you are in a way trying to buy into one of the highs. And the best way to pay cyclical stocks is to buy them when they are at their lows and when the industry is in a bit of a stress zone, which is not the case just now. So sum and substance being that if I was an investor, I would remain invested, but wait for a correction when it comes to making a fresh investment in metal stocks.
Take on metal, and while we're talking about metal, very interesting to note that spot silver is above $60 for the first time, and a big beneficiary of this today is Hindustan Zinc, because remember it derives about 30 to 40% of its revenue from the silver segment. Nagraj, a chart check on Hindustan Zinc, given the kind of run-up that we've seen today, up about 4.5%. What's your take on the charts?
Yeah, Hindustan Zinc chartically looking positive after a downward correction of few sessions. It has witnessed a decisive breakout so far today, looking like it is likely to move above the important hurdle of around 520, 518 to 520 levels in the near term. Overall chart pattern is shaping up towards the further upside, and 538 to 540 is going to be the next hurdles to be watched in the near term.
Okay. Metro brands now up 11%, Kunal. Strong volumes that we're seeing on this one, 4 times 20-day average, but this 11% move, very sharp.
Yeah, it's a sharp move. It's brought the stock back again above its 200-day moving average. But then I would believe that the stock over the last 2-3 months was just about going through a phase of a major consolidation. So even in the month of I think March, April somewhere, the stock had formed a low which is around the 1070-75 mark. The recent low the stock had made, I think last week or so, was around the 1075 mark. And on the higher side, in the last 6-8 months, the stock has been making resistance or taking resistance at the 1300 levels. So broadly it's into this 20% band, 1075 on the downside, 1275, 1300 on the upside. So it's just that with today's volume push, the stock looks to be, I think, going on course of trying to retest yet again the higher level of this range. Potentially 1275 to 1300 could be a zone where the stock may face the first level of a major resistance.
Dipan, some of the small finance banks, smaller lenders, would those be on your radar? Something like an EU Small with the announcement that came through with regard to FII headroom increased, which could lead to passive flows. That stock is perked up. Do you like any of the stocks within that basket at all at this juncture?
No, I think that one should remain pretty equal weight as far as the sector is concerned. I would prefer to play the lenders to the NBFCs. Favorite stocks with usual disclosure that we are invested would be Bajaj Finance, Cholamandalam, and gold loan company called Muthoot. Very positive on NBFCs, especially these 3 NBFCs, which are in a way diversified or have an excellent track record. Banks per se, I think that they're in for a cyclical upswing. But long-term prospects of banks, I'm not so certain. It's becoming more and more of a red ocean. And I don't think that these kind of net interest margins are sustainable over a longer period of time. They'll keep feeling the pressure. And volumes also will keep on eating away because of competition and threats from the sort of other new players also coming in. So I would be a bit circumspect on the banks, although I'm not, selling or not advocating exiting the banks per se. But very cagey to increase exposure over there. And certainly on the lending side, our preference is for the NBFCs, especially large NBFCs, which have a diversified lending portfolio. So the concentration risk is less.
Nagaraj, do you have a tilt with regard to what you like within the NBFC basket and your view on Muthoot?
NBFC basket, if you look at the chartically, has taken a sharp beat recent downward correction, and I'm expecting NBFC even sector more prominent stocks are placed at the important support level. I think once the market shows some resilience at the lower level, shows some base at the lower level, I think NBFC is the one who could lead the market towards the upper side. And as far as Muthoot Finance is concerned, has been in a longer up run, currently showing consolidation moment within a band of around 3,800 to 3,650, 3,700 levels, within a band only. We have seen some consolidation moment, tight narrow range. Overall trend remains positive for the Muthoot Finance, and if it breaks above 3,800 levels, where one can expect this to move towards the next hurdle of around 4,000 levels in the next 1 month.
That's a view on some of the NBFCs and Muthoot Finance in particular. But on that note, Dipan, we'll let you go. Kunal and Nagaraj, stay on with us. We'll welcome Anand Tandon on the other side of this very short break.
Of staring at clouds. 2 hours of staring, yes. But binge watching your favorites on this window? Bro.
I love this window.
That's Air India now.
Everyone. But we're not just anyone. We choose progress over pressure. We say no to shortcuts. And yes, to the strength of discipline. To the pride of planning. To the thrill of watching our future take shape little by little. We are citizens. And you can be one too. Sip karo. Citizen bano. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.